How are you, Syed Rafat? I am Dr. Khalid, a co-worker of Mohsen Mumtaz Bey. I am here to teach you all about the intangible assets accounting. This may take 4 to 5 sessions. Please do not hesitate to ask me what any item is not crystal clear to you. I am reminding you that this is a very important phase for success in your new mission.
I am privileged to be educated by a professor like you. I assure you that I will be one of your best students. Please go ahead.
I am sure that the information about the initial recognition of intangible assets that have been already leaked in INU is still fresh in your mind and no need to repeat it. Am I correct?
Yes, you are correct.
We will start with differences between US GAAP and IFRS when it comes to the initial recognition of intangible assets. Under IFRS, intangible assets may be accounted for either 1. Using the cost model as under US GAAP or 2. Using the revaluation model. The revaluation model can be only applied if the intangible asset is traded in an active market.
Are there any other differences between US GAAP and IFRS in connection with initial recognition of intangible assets?
Yes. Under IFRS, research costs are treated differently from development costs. Research costs must be expensed as incurred. However, development costs may result in recognition of an intangible asset if the entity can demonstrate certain criteria.
What these criteria are?
6 criteria should be met. 1. Technical feasibility of completion of the asset. 2. Intent to complete. 3. Ability to use or sell the asset. 4. Way in which it will generate probable future economic benefits should be demonstrated. 5. Availability of resources to complete or use or to sell the asset. And 6. Ability to measure reliably expenditures attributable to the asset.
I appreciate. Would you give an example of accounting for research and development costs of intangible assets under IFRS?
Okay. Assume that Al-Qawaqa Saruf and Benjamin Hanani company invested $200,000 and $300,000 in research phase and development phase respectively of an internally developed patent. In addition, the company also paid $10,000 and $15,000 for patent registration fees and legal fees respectively. Under the assumption that all the 6 criteria mentioned above for development costs are met, what is the patent costs to be capitalized under IFRS?
Under IFRS, the patent will be recorded at the amount of $325,000, being $300,000 development costs, because the 6 criteria have been met, plus $25,000 incidental costs. As to the research costs of $200,000, these are expensed as incurred and are never capitalized as part of the asset. Am I correct?
You are correct, Syed Rafat. This is enough for today. In the next session, we will discuss the intangible assets with finite useful lives.
Thank you, Dr. Khalid.